Welcome to our Intermediate Trading Concepts series. Today, we're going to dive into the world of technical indicators. These tools are indispensable in the trader's toolkit, helping to analyze market trends, momentum, volatility, and other market aspects. Technical indicators are mathematical calculations based on historical price, volume, or open interest data. They help traders and investors identify certain market conditions and potential trading opportunities. There are several types of technical indicators. Trend indicators help identify market direction. Momentum indicators gauge the strength of a trend. Volatility indicators show the rate of price movements. And volume indicators assess the strength of a price move based on trading volume. Among the most popular trend indicators are moving averages, which smooth out price data to identify a trend direction, and the MACD, moving average convergence divergence, which shows the relationship between two moving averages of a security's price. Another important trend indicator is Bollinger Bands, which use standard deviations to measure market volatility. In momentum indicators, the RSI, Relative Strength Index, and stochastic oscillators are widely used. RSI compares the magnitude of recent gains to recent losses to determine overbought or oversold conditions. Stochastic oscillators compare a security's closing price to its price range over a given time. These indicators help traders identify potential reversal points in the market. Volatility indicators like the ATR, Average True Range, and Keltner channels measure market volatility. ATR determines market volatility by decomposing the entire range of an asset price for that period. Keltner channels use ATR values to plot upper and lower bands around a moving average. These indicators are crucial in adjusting trading strategies during turbulent market conditions. Volume indicators such as on-balance volume, calcs OBV, and volume rate of change help traders understand the strength of a trend based on volume activity. OBV adds or subtracts each day's volume depending on the market's movement, while volume rate of change shows how quickly volume is rising or falling. For instance, rising volume can confirm an ongoing trend, while falling volume might indicate a potential reversal. In conclusion, understanding and correctly applying technical indicators can significantly enhance your market analysis and trading decisions. Each indicator provides unique insights, and combining them can offer a more comprehensive view of market conditions. Exciting topics await in our Intermediate Trading Concepts series. Join us as we deepen your insights into the financial markets. Thank you for watching. Don't forget to subscribe to our channel and hit the bell icon so you never miss an update.